Joining me now, we've got Burns McKinney, NFJ Investment Group Managing Director and Portfolio Manager. You're watching value equities, so make the case for value equities, and especially coming off of the larger focus that the market has had around the earnings bellwether, which is Nvidia.
Well, for starters, we've seen the last couple of quarters in the case of, some of the bellwethers in tech like Nvidia, whereby, they've been beating earnings expectations, and yet they've failed to inspire investors. The bar has been set very high, and investors are starting to focus a little bit less on, what you're spending on AI and focusing on, starting to, say, show me. We want to see some revenue generating applications. And so, that leaves a lot of room for, the last couple of years, the markets have been driven by that Magnificent Seven. And so, we're suggesting maybe a broadening of returns towards that, mundane 493. And so that could be positive for value stocks on a cyclical basis. There's some expectations that the incoming administration might drive greater economic growth. That would be good for cyclical names and value stocks. And, probably the biggest case for value right now is just simply reversion to mean, which is, one of the best, most ironclad rules you can take advantage of in investing. You've got, the U.S. value index has lagged the growth index by about 6% per year over the last 5 years and the last 10 years. And as a result, the discount that you get, you typically pay a little bit of a discount for value stocks. They're out of favor, but that discount is double what it typically is. And so, there's a lot to like in the value space right now.
And so with that in mind, and you started to lay this out a little bit, I just want to go a little bit further in depth. What are the common characteristics of value stocks for investors watching today?
For starters, you're looking for names, you want to be contrarian. You look for names that are out of favor. One of the best ways to gauge that with respect to valuations is look at price to earnings, PE multiples. You look for those that are trading at multiples that are at a discount to their peers, discount to the market, a discount to their own historical average. And, the sort of layman's way of putting it is if you have two kids, one kid always, comes home with an A+ report card, and then they come home with an A, that's not going to get parents excited versus if you have that other kid that, they're used to getting C's, and then they come home with a report card that has a B on it. Which kid you think's getting taken out for ice cream? That's kind of how we think of value stocks, is those that the low expectations are baked in, and so there's room for upside surprises.
Okay, all of these things considered, what would you make of the earnings season that we've seen? Not that earnings season is concluded, but it feels that way now that Nvidia has reported, and we got a bunch of the major retail giants, the household names, over the course of this week. But there are still some names that are going to trickle out and certainly catch investors' attention. If there is a way to kind of summarize what we've seen in a common thread that you would point back to, what is that, and how can investors also keep some of that in mind going into 2025?
With respect to this earnings season, as well as just some of the recent macroeconomic reports, one of the key factors that we've seen is that the consumer has been the workhorse of the economy. The consumer has been fairly resilient. Unemployment is certainly low, but confidence has been down a bit. And probably one of the key takeaways has been that although inflation is coming down, consumers are grappling with the cumulative effects of 2 or 3 years of above average inflation. And so whereas consumers are continuing to spend, they're a little bit more discriminating, specifically at the lower income levels. And so there's been a bit of a bifurcation there. And so in many ways, the U.S. consumer has been a value investor themselves with respect to how they're spending their money.
All right, I want to get some top picks from you. You'd mentioned value, and you'd already made the case for that. But what are some of your favorite sectors that you're keeping tabs on going into 2025?
Looking across sectors, I think one place, given the fact that the U.S. stock market is it's trading quite a bit above its long-term averages. I mean, there's a lot of good news that's been baked in. We've kind of priced in an economic soft landing, and and likewise, stocks have rallied a bit on just gaining a little bit more clarity and certainty post-election, and that's all good news. But a lot of that is priced in, and so right now, the S&P 500 is trading well above its long-term averages. And so one way for investors to maybe preserve capital and play defense a little bit would be within the utilities sector. It trades at a discount to the broader market. You get attractive dividend yields as of today. It's a sector that it's done fairly well this year already, but last year, 2023 was the worst relative year for utilities in 25 years. And so, that's an area that's been out of favor. And it's an area that, on top of having great dividend yields, you also can take advantage, perhaps, of secular growth and demand in energy and electricity and power, being driven by data center demands. Those are very thirsty for power, and it's just sort of a backdoor way, or a very cheap way, of getting a little bit of AI exposure for investors looking to play defense as well.
Okay, and so drilling down further into those sectors, and we only have about 30 seconds left here, individual names within those sectors that stand out to you right now?
If we're sticking within utilities, NextEra Energy, it's one that there has been some concern because of their focus on clean and renewable energy, but what you're getting there, it's trading at a discount to the market for the first time in 5 or 6 years. They've tripled their dividend payout over the last 3 years. They're the largest electric utility in Florida. That's an area where you have great demographics, you have a friendly regulatory regime, and it's the U.S. leader in clean and renewable energy. And so you can still take advantage of long-term secular tailwinds there.